In spite of all of the challenges that we in the world faced over the last half, very strong set of results. Reliable, we were more reliable, safer, lower cost, and that shone through in terms of the headline numbers. $8.1 billion of free cash flow, return on capital employed of 17%, and unit costs down by 9% across our major assets. And of course, that's all underpinned a pretty strong dividend, 55 cents per share for the final dividend, full year 120 cents per share, and for the third year running, $6 billion, over $6 billion returned to shareholders by way of ordinary dividends. Now, we are tending to the portfolio, so I've announced today that we intend to divest 4 coal operations, and that's our stake in BMC, which is 2 mines, New South Wales Energy Coal, and a non-operated stake in Cerrejón. And this is all about focusing our coal portfolio on higher quality hard coking coals that we think are exposed to upside in the decarbonizing world. And for these other assets, which are great assets, generate strong cash flow, but they're going to realize their full potential under a different ownership structure, in part because they won't compete for capital in BHP, where we've got other strong options going forward. Your question about whether there's more to come. This is really the focus. I think that we've gotten we're sharpening up the coal portfolio. We've made the announcement that we have to make today around BMC, New South Wales, and Cerrejón. And I would want us not to lose sight as well of the fact that in the past year, we've secured more options and advanced options in future-facing commodities. So tending to the current portfolio, building options for the future.
Now, the last time we spoke, ESG was a primary focus for you moving forward for BHP. Escondida and Spence, you've switched them over to renewables. Is there any possibility that you could make the entire Australian operation, particularly in the Pilbara, shift towards renewables as well to power those operations?
So, Will, there's more to come on this front. You've seen this big step that we've taken in Chile, where we'll move to fully renewable power for those operations. That'll mean a 60% reduction in Scope 1 and Scope 2 emissions in our Chilean business, 15% for BHP overall, and we're looking at similar types of opportunities here in Australia. Now, I will have more to say on this come September 10, when we'll be announcing an updated series of commitments around Scope 1 and Scope 2 emissions, some tangible actions on Scope 3, and we'll also be stepping back and looking at the portfolio in a 1.5 degree world, or well below sub 2 degree world. And as you've seen in the past half, this is a portfolio of assets that is very resilient, and we certainly expect that there's going to be long-term demand there for the commodities that we produce, even in a decarbonizing world.